Hey guys, it's Daniel Mahabir of the Mahabir Real Estate Group, and in this video we're going to answer the question, has the housing crash finally begun? We're going to reference a news article that recently came out by CNBC.com where they stated home prices in August hinted at a possible cooling down in the market. Now this news article is referencing the S&P Case-Shiller Home Price Index. That is the industry standard for tracking what's going on with home values, whether they're going up or going down. And it's using the latest S&P Case-Shiller Home Price Index that showed only a 1.19% growth in home values between July to August. The smallest month-over-month growth in home values since February of 2021, when we only saw 1.17%. For most of 2021, we've actually been seeing home price growth anywhere from 2 to 2.25% month after month after month. And as a result, year to date, remember we're only in August, we've already seen over 14.5% growth in home values, an astronomically high number. Just to put that in perspective, generally for an entire year, we usually see somewhere around 4 to 6% home price growth. So is only a 1.19% growth month over month a sign that the housing market is cooling down and or leading to a housing crash?
Are the predictors of real estate doomsday onto something finally?
Well, let's dig into it. There's definitely a cool down going on in the housing market, and here's why. Demand has actually begun waning and will likely continue to do so for the coming months. For one, mortgage rates are on the rise, meaning these homes are getting more and more expensive, and for many buyers, particularly first-time home buyers, these homes are now becoming unaffordable. That's right, the 30-year fixed-rate mortgage, according to Freddie Mac, for the second week in a row, just hit over 3%. This after many buyers seeing mortgage rates in the low to mid twos for the majority of 2020 and almost the entirety of 2021 thus far. And many economists believe not only are the days of 2% interest rates behind us, but we are likely to see interest rates hit 4% by the end of next year. Now keep in mind, 4% is not a bad mortgage rate at all, but unless we see some sort of correction in home prices, it's going to make it very, very difficult for home buyers to find a home in this market that fits their budget. Now, in addition to rising mortgage rates, demand is also waning because of the time of year that we're in. You see, this is in reference to a concept we call seasonality of the market, where there are some times of the year where housing activity will be at its highest and other times of the year where it will be at its lowest. Typically in quarters 1 and 4 of any year, we tend to see lower number of buyers and sellers. And in Q2 and Q3, we start to see the buyers and sellers go a little bit crazy. So although home prices are rising, they're just going to be rising at a slower rate than we've been seeing throughout the year. And listen carefully. Home prices will continue to rise, at least for the foreseeable future. You see, despite rising interest rates and seasonality, there's still an abundance of buyers out there. On my team's listings, particularly in the low to mid price point, and I'm talking the $200,000 to $600,000 range here in Las Vegas, we're still seeing multiple offers and people fighting tooth and nail to get the home of their dreams. That's because there's still too little inventory for the amount of demand out there. And you've all heard about the national supply chain issues. That's not helping our situation at all. We simply don't have the materials to build enough homes for our buyers. So obviously we are seeing a cool down. And one thing I can tell you I could potentially see happening towards the later half of 2022, a housing correction. So let's talk about what a housing correction is. A housing correction refers to a minor drop in prices. And I'm talking nothing more than 10% in a given year. Unlike a housing crash, which refers to a more than 10% drop in prices. So why do I see potential for a housing correction? As mortgage rates continue to inevitably rise, it's just gonna make it harder and harder for people to afford a home. And ultimately, our first-time home buyers will likely be priced out of the market, thus taking away a significant chunk of our demand. And unless investors or out-of-state buyers come into the market to replace that demand, we could see some listings sitting on the market a little bit longer and as a result, have to drop prices in order to bring that demand back into the market. So I always like to end these videos with tips for my buyers and tips for my sellers. So for buyers first, here's what I gotta tell you. You're likely for the coming months to see homes only get more and more expensive. And not only because of rising prices, but also because of rising interest rates. Therefore, get started on your home buying process now because waiting even just months could end up costing you hundreds, if not thousands of dollars a year in higher mortgage payments. Also know this, the next 2 months of the year is a good time for you to jump in and do your home buying. And here's why. A lot of prospective buyers are more focused on the holidays rather than on their home buying journey. And so as a result, you'll likely see a lot less competition on the home of your dreams. For sellers, here's the deal. Your window of opportunity for selling and netting top dollar is still there and will likely be there for the coming months. With that said, home prices could begin to fluctuate towards the later half of 2022, so I would just monitor that by watching our market updates, and we'll keep you in tune on what's happening. And if you do plan on selling, do it right. And here's what this means. For one, make sure you do some staging of the home first. Do everything you can to declutter, depersonalize, deodorize, and disinfect the home prior to listing it on the market. Second, make sure you're pricing and marketing the home correctly. You see, although we're still dealing with a very strong seller's market, the actions required to net you the most money possible on a home are just not the same that they were just a couple of months ago. Gone are the days where you could slap an overpriced asking price on a home and still see multiple offers flooding into your inbox. Nowadays, you have to understand the demand for your home and what is the correct pricing and marketing strategy to get the most eyes and the most foot traffic through your door. And in many cases, that means understanding where is the fair market value of my home, and does it make sense to potentially even underprice the home to get that traffic through your door as opposed to the overly aggressive home right down the street. And my last tip for you in listing your property in today's market, make sure you hire the right agent. With as hot as the housing market has become, homeowners now have more options than ever for selling their home, including the hundreds of thousands of real estate agents with a license out there, not to mention these large iBuying programs with tons of cash looking to buy and flip your property. And then of course there's the mom and pop investors that are just looking to build their investment portfolio. That can make it a little bit confusing for what should a homeowner do to sell their property in today's market. The fact of the matter is this, hiring a full service, full-time real estate agent has always been and will continue to be the #1 way to net you the most money possible on the sale of your home. They know how to get the most eyes and traffic on your property. They possess the negotiation and marketing skills to get every dollar in your pocket, and they have the tools to make the process super smooth and easy. So make sure you take your time and do it right. Thank you so much for watching. Again, this is Daniel Mahabir of the Mahabir Real Estate Group. If you like this video, make sure to subscribe and like our channel. Thank you for watching. Have a good one.